When we think of the way that income is being generated across portfolios at the moment, it really is a consequence of over a decade of central bank policy. So if we think about how central banks responded to the GFC, one of the main features was the reduction of interest rates. And that really is a trend that has continued on since then and has become more extreme or more pronounced since the COVID crisis arose. Now, what the impact of this has been is to drive down income sources right across the portfolio and really push the responsibility of income generation onto the equity portion of the portfolio. Now, because of the COVID crisis and because of the economic disruption that it's caused, what that's meant is many companies are able to, or they all can, withhold dividends when they need to. And given the level of uncertainty, many of them have opted to either reduce dividends, delay dividends, or indeed cancel dividends to strengthen their balance sheets. And in doing that, that's had a pretty significant effect on the short term of income coming off the assets. There are two main sources of investment return, and those are of capital return and income return. And we consider both. Ultimately, income is a very important source of return because broadly over history, it has been a more stable source. That said, it's the capital that produces the income. So both are important, and it's really hard to overmanage one or the other. Ultimately, you end up with a blended result. But when we consider the capital return aspect, if we were to hold capital returns at zero and try and focus on income, the real risk there is a loss of spending power over time. So we all know what inflation is. We all know that it means that the spending power of a dollar loses a little bit of value every year. If you've got a stable capital base and it's producing the same amount of income every year, you're actually ending up with less ability to use that money every year. So unfortunately for income returns, the environment is likely to remain challenged. And I think our easy way to refer to that is when we look at the commentary from central banks, this trend that we've seen of increasingly reduced interest rates. There's no commentary that central banks are likely to increase interest rates anytime soon. So that's likely to underpin the overall income production. Now, that's not to say that we're not expecting any improvement. When we consider that the market fell by 30%, history tells us that you'd expect income to fall by 30%. Certainly, we've seen markets recover since then, but income production tends to be lagged. So, we would probably expect some sort of upward drift in income over the coming months. But really, it's dependent on the economic confidence of those constituent companies and economies in their ability to feel free to distribute their earnings rather than save them for unknown impacts. So when we're looking to try and improve the income return of portfolios, unfortunately, there is no silver bullet. The interest rate policy of central banks has driven down income production across all asset classes. So unfortunately, that has really impeded what we can do. That's not to say we're not doing anything. What we do look to do is make changes at the margins wherever we think we can ultimately improve the mix of return. So when I say the mix of return, I'm talking about the production of income and the production of capital returns. But ultimately, we're seeking to balance that off. Our overall outlook for investment markets moving forward is really solving for the combination of an unprecedented amount of stimulus having to meet an unprecedented economic shock. And that's a tricky one to solve for. Initially, the stimulus measures that have been put in place are rather blunt instruments. And over time, those are going to need to be more specific and really looking to deal with individual problems as they crop up. Now, fortunately, both fiscal authorities, i.e. governments, and monetary authorities, central banks, have all pretty much universally said that they stand ready to do whatever it takes. Things to be aware of, or certainly the big three things that we consider, are the US presidential elections, the US-China trade relationship, and Brexit.